All right, ladies and gentlemen, I hope you're having a wonderful evening. If you have been subscribed to the channel, you already know what's about to happen. It is Thursday. We have the live watch list, but this is a very important one because tomorrow morning we get the non-farm payrolls, and this jobs report is really the only thing standing in your way of a rate cut in September and a very big policy shift that you could argue you have been waiting for almost 4 years. It's 4 years in the making, 2 years of rate cuts, and then 2 years of waiting, and then now we are here. Rate cuts, rate hikes. So we got a lot to talk about. I have a breakdown for you. I actually have some key numbers that you want to be looking at, and we're going to go over what you need to be watching for tomorrow. I will be live. So before I get in anything else, I do have a lot of plays and other things that I want to go over, but let me remind you, I am live Monday through Friday, 30 minutes before open, youtube.com/the stock market. And especially for the data tomorrow, I'm going to be live 1 hour earlier, about 30 minutes ahead of what I usually are, like 15 minutes. It all depends on my certain schedule, and movement. You know what I'm saying? So yeah, I have to poop in the morning, okay? I'm being honest with you. So we'll see where it's at, but I will be there before the release, and I'm going to cover everything live. So if there is ever any changes between now and what happens, or in the morning, overnight, you never know. I am going to be there in the morning. If you want to watch the plays live, then I will see you there, baby. So it's a big day. It's going to be the non-farms. We have a lot riding on the line. I think this is arguably going to be the second or the first most important day of the worst month of the year in a very, very big year here. So, Chattadonia, I hope you're ready. Oh, I have a big play to talk about, or I have a big idea. Maybe it's a live watch list, baby. So on that note, my people who watch the recap, you guys are going to have to bear with me. I know sometimes it's good, sometimes it's not. You know the vibes, baby. But I hope you guys are living good, man. It's really good to see you. And honestly, I wish some of you could see the live recap. But unfortunately, we got to delete it if they get too crazy with us, You got to watch out. Just stick and move, baby. So on that note, though, let me say what's up to the chat. They here, baby. They here live and in the flesh on this beautiful evening. It's so late on the East Coast, and they tuning in, man. I'm on the West Coast, bro, so I'm chilling, man. I'm chilling, bro. So, Chad, I hope y'all feeling good, man. What's going on? Good evening. What up, NRG? What up, Dan, Dago, Daniel, Answer, Open Case, baby? What up, Larkhead? What up, Kayla, BD Toyota, James Cash, baby? What up, fam? What up, El Trapato? What's going on, Lori, Gus, Dakota, Dino, Samuel, Kurt McGart, Simon, Super Takeoff? What's going on, baby? Good evening, man. Don't let me, man. I better, before I say good morning, I better move on. What up, Vin? What up, baby? Oh, on Harrow. Live and in the flesh, baby. How we living? What up, Matthew? What up, Skinny? Jerry. Would ya? Oh, man, that's a great way. Great way to start this. So I hope you guys are locked and loaded. Again, tomorrow is going to be the big day with the non-farm payrolls. So let us not waste any more time. I hope you like the video. I hope you love yourself. You guys follow me on Instagram. Some of you may have saw me on it. You guys follow. I hope you did that already. All right. I hope you at least get that out of the way. So here is the deal. Right off the bat, tomorrow for the jobs report, you need Goldilocks, okay? And some people, they were confused a little bit. They were asking me about it, and I just said it's very simple. You want a number that's not too hot and not too cold. The weird part about tomorrow's data is that it has a very low average. If you ever wonder where these numbers come from, you guys got to think about it. What's actually happening when it comes down to the economic data? They take all of these economists, or not all of them, it's really like 40 or 50 of them, the quote-unquote qualified economists, and then they ask them what they think the number is going to be, and then they take a median and an average. And that is how you determine what the number to beat or miss is. So it's very subjective in terms of what is a good number or not, but hopefully that makes sense for all you traders, because if everybody was expecting a number, it is priced in. So that's a little bit of a background and why I'm bringing that up, because the data tomorrow, it has a low average in terms of if you took all these economists and averaged them out, they're expecting a pretty low number. If you look at the median, it's about 30% higher than the average. So tomorrow we are expecting a number about 160 at the median and 120 at the average. And now this is where it's going to get interesting. And if you guys remember what I was telling you, it's going to be between that because, well, that's what the ISM manufacturing said. But here's the deal. In terms of how all of this is going to feed into the data tomorrow, what you got to watch out for is quite simple. If the jobs market is too hot, that could change the Fed's ideas. That isn't supposed to happen. People are expecting some level of rebound in the jobs market tomorrow. They don't think it'll be as bad as last month, but it's not supposed to be too good. If you get some sort of crazy recovery and the jobs market is really hot, maybe people start questioning whether or not you're going to get this rate cut, and they're going to stop questioning whether or not you get a recession. But in a weird way, you don't want too big of a beat. A very big beat, it's either going to make people feel like the story has changed, or some of you might be thinking, well, what do you mean? If the data changes, how does does that change the economy? Well, not really, especially when everything's lagging. So think about it. If there is a big beat tomorrow, that would just lead people to kind of doubt what that data is saying and where we stand with everything. So you don't want too hot of a print, but now more complicating, I would say. You don't want too cold of a print. And this is where tomorrow is going to get really, really interesting, because a low jobs report tomorrow, that's going to have everybody saying that there's going to be a recession and that the Fed is already fell behind. So too low, that makes things complicated, but I'll make it very simple for you. Anything below 100,000 tomorrow, I truly think that will cause a panic. And by panic, I mean more than a 3% down day on the NASDAQ. I don't know if any bank has said this or not, but that is where I stand on this, because quite simply, a low number tomorrow, I think, will catch people off guard. And a number below 100,000, I mean, you're on the cusp of going negative. I don't know if you guys recall, at one point I told you when the jobs report goes negative and you finally get a negative revision, that'll be bad. So if you do get a really, really low number, that will not be good. But then at the same time, anything between 100 and 150, it's still kind of sketchy, because, again, people are expecting that this jobs report is going to be stronger than the last jobs report. So if that's the case, if you're coming in like 115, 120, 130, and barely above that low print that people thought was abnormally low and had to go through that revision, that got people a little bit worried there. That's still going to be kind of worrisome if we get that again. So pretty much any of these low numbers, it's going to have more friction in terms of the response. I do think a high number, or at the expectation, literally anything like 150, 160, that'll be great. Anything above, I don't think people will like it initially, but at the end of the day, too, I will tell you, too hot of a print, I would say, is less of a problem than too low of a print. So welcome to Goldilocks and soft landing or not. And if you don't know, too, the yield curve has also uninverted today. So yeah, we're going to talk about that too. But fact of the matter is, whatever happens tomorrow, and I guess let me get to the next key here, because this is it. If you really want to understand tomorrow, there's a couple of questions or main themes that you need to juggle. And the first one is, tomorrow should give you information on how many cuts we get in 2 weeks. I say September, but we're in September. Literally September 19th, that is the expected cut date. So if tomorrow's jobs data comes in line, if there is no problem or it's a little bit lower, people are going to use that data to say, yeah, Jerome Powell is cutting rates in 2 weeks. And on top of that, if the data is really weak or barely weak, they're going to use that to justify 25 basis points or 50 basis points of cuts. That's 1 or 2 cuts. That's going to show up on the Fed futures. People are already talking about this now, and here's the deal. Inline number, equals one rate cut, 25 basis point. If we get a very low number, people are starting to say that if you get 50 basis points, that's starting to lean more towards hard landing. So that's the first part about tomorrow. But like I'm saying here earlier, the only way that this conversation gets derailed is if you have a very, very hot print and now people are like, well, maybe we don't need to talk about rate cuts. But then again, it was only a couple weeks ago, and it's kind of one of my most favorite quotes from Jerome Powell recently. Homeboy said he doesn't really care about a deteriorating labor market, and he also said that too hot of a labor market doesn't really get in his way. So that's where tomorrow's going to be interesting. But like I've been telling you, I don't think people are worried about inflation. And if there's any sort of data that's going to add friction or cause confusion or create doubt in terms of Powell cutting rate in September, it's going to be tomorrow morning. But if everything goes well and that confirms everything moving forward, I mean, this is the final pathway towards the landing, you guys. I hope you realize that. Remember, I mean, again, the whole, let me put it this way. Everybody has been asking or waiting or looking for a soft landing or a hard landing, but what is literally about to happen with rates? If tomorrow is good and then the CPI is good, I mean, think about it. The rates are about to start coming down. Literally, we're talking landing, we're talking descent, and well, this is it. There's nothing to talk about landing if we don't start the cutting, because now the rates are actually descending. So this is a very, very big moment. And even on top of that, man, if you guys have been watching, it was only a couple of months ago. I've been telling you this whole time, very, very simple. Until the yield curve uninverts and until you get some more activity, I don't and we really find the rate cut in that policy shift. I mean, I don't think anything crazy is going to happen. I even think there could be a delay. You might even see a 6-month delay between even Powell and the effect. Because remember, it's not as if you saw the instant effect with rate hikes. So keep that in mind on the downside. But like I'm saying, if we get a hot print tomorrow, shouldn't be the worst thing, but that could derail the conversation. And then the final thing, man, a super cold print, a very low number. If it's negative, like I said, that'll be bad. I think if you get a number below 100K, so look out for that number. If it comes in below 100K, I do think we will have a 3% day. And if it goes negative, I think you're about to have your hard landing within a couple of months probably, if that's the case. So be on the lookout for it. I don't know if that'll happen, but I just thought I'd throw that out there. And now the final key for tomorrow is what to expect in terms of the movement. And we could even go back to the chart too. I do have a couple of things that I want to show you. We even talked about a chart today that you guys unlocked on the live stream, but simply put, go look at the option chain for the SPY, the SPY, the S&P 500 ETF. It is pricing in $6 either way. So that is about 1.1%. We did the pricing today on the QQQ as well, and that is 1.5. So here is the deal. When you're looking at it, I mean, you're pretty much at 550. It's either tomorrow you're going to either end up at 556, which is where you just were at and where everything started dropping middle of July. And then if not, I think you go down to 542, where the last gap down and gap up was. So isn't this perfect? So literally that gap fill is right there at what's priced into the downside, and then the upside is literally where you fell. So in a weird way, man, as important as this is and as wild and volatile, it's so rigid in terms of some of these levels. It's very, very computery more or less. But with that being said, tomorrow's data though, that should start moving things. And then though, just don't forget, it's a symphony of how this is the final steps, the final procedure leading into the descent of rates. So don't forget that as we do start moving forward. But that's what we're looking for tomorrow. And I do think the main theme should be setting the stage, the rate cuts there, and then we'll see where all of that takes us. So that being said, is there any questions about it? And before I actually take any of those questions, or post your questions now and then I will get to them, I do want to show you that chart, and I want to show you the non-farm calendar just in case. So there's two things. Number one, and this is why, again, tomorrow, like I'm telling you, everything has to do with rate cuts tomorrow. Like, please don't, this is it, man. Don't underestimate this. It's very, very important, but this is something that we're talking about something getting derailed, and this is why tomorrow can be an absolute snooze fest, and all you get is an inline jobs number. You guys realize that, right? I hope you... Is this on? Do you guys hear me? You got to realize tomorrow you can get nothing. An absolute snoozer in line, and then that's it. Nothing. I mean, everybody, oh, yeah, okay, boom. And why do I say that? Because you got to realize the market is very lopsided to bullish. You're already near all-time highs. Even then, you recovered a little baby flash crash last month. But, like, straight up, right now, the market is literally as bullish as you can get. If you even take, like, the last, 12 months, that's like this little tail and shadow. You are pricing in now more cuts, and everybody is leaning towards this idea of a cut. So in a weird way, you have less people hedged for this idea of no cuts. In a weird way, no rate cut would be shockingly surprising to the market based on how it is pinned or how it's priced in right now. And that's what this chart is showing you. The rate cut odds are literally as bullish as it could get right now. So that is the chart that I wanted to go over. And then the other thing, too, just keep in mind what I showed you guys last time, because, I think it's ironic that the print is going to be where it is. Like I told you, that low average and the high median, because remember the ISM. This is where the ISM was last time. Last time you had ISM as low as this. The jobs was like 165 to 180. And then even then, last time the ISM came in lower, that gave us that 114 print. So I don't think we should go above 160. I think something above 160 will be hot. But like I'm saying, I wouldn't really get too bothered by a hot print. That's not as, again, I think Wall Street can talk themselves out of a hot print. That's no problem, Habibi. But a too low of a print, I mean, it's going to be hard not to have the hard landing conversation. So we'll see where that all takes us. But that being said, yes, this is live, my friend. So what are we doing? So let's see what's going on. What do we got? Any questions? Otherwise, I got a lot of things. Good evening. Too much highs may not produce. Well, again, everybody is just too, I don't know. It's like it makes sense. Powell wanted it. This is what Powell wanted, but everybody and their mother is priced on the side that rate cuts are going to happen in September, so nothing should get in the way. Can we cover the yield curve inversion? I have a bunch of old videos on it. Even then, go check my latest one. It's called Exactly When to Buy TLT. But essentially, this is a conversation we pretty much had every week. At this point, I am suspecting that the yield curve uninverting, when Powell cuts rates, that will be my sign that the economy is about to slow down. So I take that as a negative. I don't think as far as tomorrow, it relates, but not really. I think it's just all ironic that it's all coming into focus right now. So, no, I don't believe in the soft landing. The market right now has about, I believe, a 70 or an 80% chance of a soft landing. So everybody on Wall Street and how things are priced and positioned. Let me see. This is the latest one I have. So this was like end of August. 76% believe in soft landing, 8% believe in no landing, and then 13% believe in hard landing. So, but I personally, I lean towards the hard landing. Although base case, literally, you are more likely, according to the market, to get a soft landing scenario. Oh, I forgot. Yes, you're right. That is another theory. We talked about it today. What I think, unfortunately, because I was telling you how tomorrow really could be a snooze fest. Watch out for the fact that if tomorrow's numbers are all in line and nothing like shocks anybody, then watch out if there's a big revision. Because then if there's a big revision and this month has no like real effect, but the last month in the last 2 months get revised higher or lower, that could be the main driver. There is people, again, and I mean, I hope you guys are aware. It's funny because at other times we really did care a little bit more about some of the other indicators. It's not like they stopped existing. People are still looking at them, but I do think there's just broader pieces of the puzzle to focus on. But there is going to be average hourly earnings and unemployment rate. So this is stuff, I don't know, I think it's kind of the older stuff we've talked about, but keep in mind this unemployment rate and average hourly earnings, these are the other factors of the whole scenario. Average hourly earnings relates to inflation, and then the unemployment rate, that is, the jobs relative to how many people are actually active and participating. And that being said, I mean, do you guys see why a low jobs print would be bad in this situation? So do you guys see how I'm telling you a lower jobs number would be problematic? Does anybody see it even from this chart, 1 year, 5 year? I mean, again, it's that's why, people in the narrative and the yield curve, honestly, I mean, I'll tell you, what does this look like? What can you relate it to? This one's a good one. Close, kinda. You're close with TLT, kinda, little bit. Yeah, there you go. So do you see why, if the job, this is unemployment. This is a chart of unemployment I'm showing you. So think about it. If that number's too low, like we've talked about, and that's bad, you get too low of a number, unemployment rate goes up, people will be watching this, but like, look at this chart. Does this not look like the yield curve? And then go pull out this chart from the 80s and 70s. You should probably overlay this with the yield curve. Imagine, it's like when the yield curve uninverts. If unemployment uninverts with it, I mean, there you go. But that is why you got to kind of look at this. This could be a runaway train, and that's where people don't want to deal with that. That's why it's like, before you know it, you go get 2 or 3 months. Think about it. You go get 2 or 3 more months in a row of this going up. This chart is going to be 6-7 months of bars going straight up of unemployment. You know what I'm saying? That's the temperature gauge heating up that whole time right in front of you. So this is why a low number has people still on edge, and that's what they're going to be looking for tomorrow. But, yeah, we'll see. Otherwise, if everything chills out, if unemployment doesn't rise up, maybe the yield curve calms down too, and maybe this calms down and then chills out. Ta-da! But that being said, I still have a little bit more for you, so now let us get into the plays. So, right off the bat, I do have a couple of plays. We made a play on Broadcom. So I have another big play I'm going to tell you about, but this one, I think it was interesting, and we'll see what happens because we do have the data. And I don't know, keep your eye out for this because I really thought this was interesting today, and our play was kind of close here. But Broadcom, I did not want to play it. But then I forgot we just kept pricing in. We were pricing in the data for tomorrow, and I already had the calculator out, and I was like, okay, Broadcom reports. I didn't really want to deal with any of the earnings, and I just pulled out the calculator, and I noticed that Broadcom, one of these big AI chip stocks here, I was pricing in about 5-6%, and I was like, that was interesting because it seemed like it should have been higher. And then I went and I pulled up my previews, and I found that the play like 2 days ago, 1 day ago, was pricing in 9% for earnings, 10%. Even if you went on TD Ameritrade, the market maker expected move was saying 10%. So literally with 10, 20 minutes before close, the whole entire option chain on Broadcom deflated. It was the weirdest thing. It was only pricing in 5%, and it's moved 5% in the past. So I was like, you know what? 2 standard deviations would be 12%. It's somewhat reasonable. I threw $60, but I only went to the put side, and they missed barely and like had a narrow earnings, and then they went down. So what I'm trying to say here, watch out for the play tomorrow, but keep your eyes out for any of that like option deflation. And what I mean is like a good example is like volatility. So if tomorrow gets crazy and you know the options, like the short-term options or anything gets crazy, wait till they like absolutely deflate if you are going to make any sort of volatility play. Because I'm telling you, that's tomorrow. We'll see how those value, but I think it was I'm very glad I got that. But the way that stood out, I think that is definitely going to open up opportunities on some options, especially if we start getting bigger moves with the volatility. So keep that in mind. Watch out for that one. That's play one. I think I grabbed the I grabbed the 132 put for $60, and that was 2 standard deviations. So yeah, but that's play number 1. And then play number 2 now. I'll give you plays 2 and 3. So play number 2, dude, this one, I'm going to tell you guys right now, it's very, very simple. If Japan is getting clapped, usually the yen is going to go up. So the last couple of times, I know it sounds very simple. I don't know if you guys are aware of this. Is like if Japan does bad, like if the Nikkei goes down, the Japanese yen strengthens. I don't know how many of you remember when I told you about that trade. People were doing that. You literally go long on the Japanese stock market and then short the yen, or vice versa. You go long on the yen and then short the Nikkei. It's kind of its own little carry trade, but a lot of people don't know this, but some people do. But here's the deal. If you ever see like a big divergence, it's usually a good arbitrage opportunity. It can backfire on you, but to give you an idea, I did this. So I typed this out, and then I made the play, and I'm up like, I think like 40 or $80 on 2 of them. Because I went to the JZ. So I did right before I started this, right as I typed this out like an hour ago or 30 minutes ago, I bought a yen future because Japan was down and the yen futures were barely moving. So, yeah, it's just keep your eyes out for it. It's very risky, though. You can get clapped. I don't think it's foolproof, but the last couple of times I've hit it, it's been good. Again, that one from the other day, remember, literally, last live watch list. Remember, if you guys were here, I told you I bought the yen. You remember that? I sold out of that this morning, and that was only one contract. So I did it today. I grabbed 2. I did it on August. I grabbed way more than 2, and it's any time it's happened. Literally, you could see the Japanese stock market will be getting clobbered, and sometimes the yen will not be moving at all, and you can make a play. But why it's so risky, because sometimes the market will have a big move, then the yen doesn't react, and then if the market in Japan recovers and it's something stupid, you're going to get blown the fuck out. So that's kind of the downside, but keep your eyes out for it. If you do notice a very major bad move in Japan and you see that yen is not budging, if you're up for the task or you have that risk, you have that level of risk tolerance, that is something I would watch out for. And I've been doing it in overnight trading, and it has been extremely profitable, but I just told you guys, so it might last for like another week and then it gets clapped. So that's it. But it's been a good money maker just even in this last volatility moments. FXY, way better for a hold. I hooked you guys up with that even the other day. If you really go look at when we were talking about that and I was laying that out, you got a really, really good price on that. So I do like FXY for the buy and hold, make it easy, make your life have no problems. Like that's it. It just is gonna have upside, but it's not gonna have leverage. But then it's gonna have less downside at this point. Like I'm saying, it's the yen is a good play. It's a good idea. Again, we've been documenting it for so long, and yeah, if you did anything with leverage, it was easy to whiff it or get clapped. But like I'm saying, if you put yourself in a non-levered FXY, again, maybe I'm wrong. Maybe fucking there's World War III. That's what I'm saying. I think is there a world where I'm wrong about the yen? Can it go back to where it just was? Maybe Japan fucks up. Maybe the world goes crazy. You know, I hear myself talking about it. You know what I'm saying? But I don't want to be overly confident. But like I'm saying, I think that play without any leverage on like FXY, and if you are down to hold that one and you just want to capture that, I think it's so much more upside than downside at this point of where we're at, especially with if we start cutting rates and all of that shit too. So, but you got to be cautious. But again, the only way you fuck up on it is if you put a time on it. If you put, again, that's why futures even get clapped. It's like Ghetto Bill. It's different because it's more speculative. But it doesn't pay a dividend. I don't think it does at FXY. It shouldn't, but it has. Again, don't forget, these are safe havens. The Swiss franc is already recovered. That's another one too. If you don't want to go with the yen, the Swiss franc is another one. But then again, if we run into, you got to be careful, because if we do run into a problem, there could be an issue. So you got to keep that in mind. But yeah, I do like, again, I like that one a lot. And like I'm saying, just pay attention to the yen arbitrage. It's a good idea, but let's see if I jinxed it by telling you guys. But pretty much, I mean, for the last month and a half is done good. Done good like a milk. Good for you, man. I think I don't like TLT. You can't buy. I don't think you could buy and hold TLT like that. Once we get once we get more information on Powell, then we could talk TLT. But that's what I'm saying. FXY is what you want. Like the people who want to just buy TLT shares and hold it until, Daddy Powell cuts, and they're, what you're really looking for is FXY. You know what I'm saying, baby girl? You in the club and you looking a mess. You really are looking for Jesus, and it's FXY in this case. You know what I'm saying? I could tell with all that toxic behavior. You're not like, you think TLT is the answer, okay? You're gonna end up with TLT and duration risk, okay? You're gonna walk. The doctor's gonna say you have duration risk. You're like, what the fuck's that? You don't even look at it. You don't even know. If your doctor said you had duration risk, so you see what I'm saying? So why deal with that? But even then, it's not like the yen is any less complex, but I do think the yen has way less risk than that TLT, and it has a high correlation with TLT. So it's not like at the end of the day, it's not as if like TLT and FXY. It's not like I'm giving you a bad idea. Like, man, y'all don't feel me sometimes. You know that? I'm just telling you this because I love you. You know what I'm saying? Because, like, look, FXY has outperformed TLT, but it's only underperformed it one time in the last 5 years. Do you get it? So it's going to move with TLT, but it has less downside than TLT and less of an expense ratio and fee and all that. But it doesn't pay the divvy, I don't think. Man, y'all don't feel me. So, yeah, you pay money to hold it instead of you pay money to hold it instead of getting paid money, because TLT will pay you, but there is the expense. Again, TLT, you make more money on a bond. So remember, if you want to play TLT, you're better off with a real bond. And if you don't want any of those, again, FXY, like I'm saying, it offers its own unique opportunity. Ta-da! But yeah, that's why I'm saying. I gave you, but that's the problem. I mean, it's FXY. I told you guys this the other day. That is the problem. I gave you guys the FXY play literally, like it was already right here. So it is already up there. I still think there's an opportunity depending on what's going on. But at the end of the day, I mean, it is already like 5% off or something like that. So just be mindful, be demure, as the kids say. But that being said, since you guys are going down this road, let me just wrap it up with one more play because I'm still in oil. So this is my final play. I didn't want to get too involved in oil. I was telling you guys, seasonality is pretty bad. But I said I wasn't really trying to play with it. But then it had one of those 4.5%, 5% down days. So I don't know if you guys have noticed. Anytime it drops like that, I buy it. So I think it's going to have a relief pop on one of these days. It might go down a little bit. I even was talking 67. I was green on it today, a couple $100. I'm in MCL. I'm in the micro futures. But then it went green and then it went red. I'm down on it now like $250. I have 2 of them or 3. So I'm down. I might grab another one, but I like it. I really, really like it, actually. So we will... We'll see, but I just think you get your one pop, get out, and then that's it. And then, ta-da! So, that being said, that is all that I have for you guys. That was a good 36 minutes of plays and non-farm breakdown. Do you guys need anything else? Do you need any play questions? We even talked FXY. I hope you guys are ready for the non-farms. What are some if it's no rate cut, I think those SPY debit spreads will hit for a little bit. I think you'll get just all sorts of volatility. It would be insane. Thank you as always. To trade micros, it all depends, but you could trade some of the cheap options for like $600. Let's see, and then where's the micro yen? But like I said, was it J7? But like FXY, dude, it's like mad cheap, So like FXY, what the fuck? J7 1700? Oh, I thought it was cheaper. No way. Damn. Yeah, the yen's 3,000. Shit. So 1 yen, yeah, but damn, I thought it was cheaper. Because you could do like, like 10Y? That's like the mini 10 years. And you could trade those for $350. But like I'm saying, FXY, though, without that leverage, without futures, again, it's a lot safer, but it doesn't offer the same upside, and it doesn't have the same back and forth. I was looking at my Instagram. You guys follow me on Instagram? I hope you did. Gym was good, but I was too scared to play. I was too scared to play basketball. I was like, I'm gonna blow up my knee. I'm not cut out for this, but I wanted to, and there wasn't like that many people there. Like I didn't want to wait till the kids got there, the high school kids, and then I got a good tan in, bro. I can't stream 2K. I have it. I don't know, but I made a build, but I don't like it. I really don't like it. So we're gonna see. You email me a chart of the 10-year in unemployment. Oh, let's see. Bam, bam, bam. His chart's kind of weird to read, but it does kind of seem, I'm assuming the blue here is the unemployment, no? Or no. This is the yield curve, and then this is 0. Yeah, I guess it kind of precedes it. Yeah, yield curve on inverts, unemployment. Yield curve on inverts, unemployment. Yield curve on inverts, unemployment. In the 80s and 70s, it was a little bumpy. Yeah. So, but yeah, generally. But that's what I'm saying. I think even it makes sense when you just look at it. Like straight up, you could see it. Very interesting. So that's why, again, tomorrow there is some importance to that chart, that unemployment rate. Watch out for it, but like I'm saying, that is the problem. Yeah, you guys, the last chart. So the last chart that got unlocked, it was this. It was everything being as bullish as could possibly be with the rate cut odds. The other chart, you guys were here on the live. Again, we were talking about the commodity super cycle, just where commodities are at. This was a great point that we brought up the other day because I was letting a lot of y'all know, and this is something I really think you should keep your eye out for in the future, because after these rate cuts, if we do get it in September, pay attention if oil and commodities go up or down. If commodities and oil rips after the rate cut, we're going to have a hard landing. Otherwise, if it goes down, you're going to have a soft landing. But here's the deal. The number one point you got to, this is why I like watching the commodities, because it's very simple. Whether you have hyperinflation or deflation, whether you get inflation or deflation, commodities will reflect that environment as they have throughout history. So that's why the commodities can be a very good gauge at times to see what we're really going through. So that's another one I would be watching for. And then what was the first chart? There's one more chart at the beginning of the week. Which one was it? Oh, the ISM. Duh, this was the one that predicted everything from Monday. So, yeah, and that's why, too. Again, this even feeds into tomorrow because, based on the ISM, this is the correlation between the non-farm. So remember, if you guys watched the watch list, I gave you a cool little jump. It was the stitch, bro. It was really, really cool. Because if you watched it Sunday night or Monday and you came in, we said watch it and it played out like clockwork. But keep this in mind. This chart right here, that's the non-farms. This is the ISM. So just saying that once that ISM comes down, the non-farms usually follow. Even if the non-farms are fake, the ISM has a very high correlation with them. That's like the beauty of it. So again, whether you doubt the numbers or think the BLS is incompetent or whatever, fact of the matter is, over the last couple of years or even a long time, this correlation is high. So there is your opportunity, my friends. Hope you're ready. But yeah, those were all of your charts. Those are all of your charts this week. I'll have more for you next week. But and even then, yeah, dude, tomorrow's Friday. I can't believe it, baby. So, Chadadonia, that is all that I have for you. If you have any final questions, now is the moment. I'm going to have to wrap it up early because, again, I will be live extra like 30 minutes, hour earlier tomorrow. So, again, just be there, youtube.com/the stock market, baby. Yeah, it might be a snooze fest, so don't get too pumped up. I'll be there. You know what I'm saying? But we'll see where it takes us. We will see where it takes us, baby. All right, man. That's it. I'm scanning. Where do we source the charts? Oh, those ones, they're the Bank of America private client ones, unfortunately. So it's a little bit less sourceable. CRM announced dividends. Ooh, I thought they already had a dividend. It was just tiny. How many hours do I sleep? Oh, enough to get the job done. I woke up early today with the poops. I played a game of 2K in the morning because I woke up shitting myself practically. Sorry for the visual. But I was like, and I did everything in the morning, and I was like, dang, you know what? All right, I'll do it. Let's get it done. We'll see. Alarm set for 4:30, baby. Let's get it. All right, man. So, Chad, if anything, I could even go live tomorrow, bro. Like, worst case, I'll just play it if you guys want. I could even make this stream live while I poop or something. It will be less professional, just straight. You know what I'm saying? It'll just be chilling. So, yeah, but we'll see. Either way, though, tomorrow will be the day. Head on a swivel. We'll see what happens, Again, I don't know. I might hold my yen plays or I might get out of them before. And that's it. I mean, I said it for any of my degenerate gamblers. Well, you might be too late now on the options, but if you are the type to trade futures or anything, I told them today, I was just like, bro, you're better off buying your play now and just sacrificing the 0.5%, 1% move rather than chasing the first move and then getting sold off by the cash open and then playing that cycle. Sometimes it works, sometimes it doesn't, but I'm saying if you're trying to capture that bigger volatility move, I would just make up your mind, go one direction, and then ride it out from the first move, because that first candle, that's going to be the moneymaker for a lot of people. So that's why I'm saying you're better off getting in ahead of it than not. But not a recommendation. You will lose money. We'll see what happens. But Chattadonia, that is all I have. You guys have a wonderful evening. I will see you in the AM. Good luck. Finger to the sky and horn.